Just want to bring your attention to euro sterling on the weekly time frame. As you can see, that last week it high tested off a soft level of resistance here. This is at the highest points the euro has been against the British pound ever since this time last year in 2017. In fact, over the past 12 to 16 months, we've done nothing but kind of move sideways between these two levels of support and resistance. So logic will dictate based on that it makes sense to simply buy the bottom of the range and to sell the top. Given that last week closed as a bearish pin bar reversal, which is a sign of bears creeping into the market, and it tested this horizontal level here, and the fact that it's an ABCD completion, if we zoom in on the 4-hourly time frame, we can see that we do have that completion point. So as you can see, you've got point A, B, C, D. So if you drag our Fibonacci extension on it from point B to point A, and we go back down, or up, sorry, to the weekly time frame, we can see that we've got the close of the weekly below the 1.618. There we have it, and it's also rejected the 1.272. So two fib extension levels there, which it's rejected. All right, so the standard entry technique for this one could be, if you want safety, the entry just below the low of last week with your stop loss above the high. That is one idea for you. However, if you do get your profit shooter on, and we do map that out, then the reward to risk might be a little bit negligible. It depends how much you feel a 1.3 to 1 reward to risk trade, how much that really kind of like incentivizes you to actually place a trade. Quite frankly, a 1.3 to 1 reward to risk trade setup isn't really something to get my tail wagging. However, what we can think about doing is getting a more aggressive entry, and one way we could do this is simply, as it's a false breakout, given the tail is above the horizontal level, we can simply place an order to sell on the midpoint, at the halfway point here, of this bearish pin bar reversal last week. So what you can do for that is simply just get a quick way of doing that, and that's just simply tell you what the 50% fib level of last week is saying. So if we zoom in that little bit more, it will tell us. Okay, so an entry in the midpoint here at 0.9010 with your stop loss above the high of last week. That will mean that a 1.3 to 1 reward to risk trade, if for example we are triggered into the trade at the midpoint, if price does go up and the market does continue to go down, or euro continues to weaken against the British pound, then we can simply say that this 1.3 to 1 reward to risk trade is, instead of that paltry amount, a little bit higher, because we've got that aggressive entry. So if we drag this down a little bit more, it's a 4 to 1 reward to risk trade, and if you're risking 2%, that's 8% potential gain. Now, obviously, it's probably unlikely that the euro is going to go all the way down to this point here. So what we'll do, if as and when we're scaled into either position, whether you trade the standard entry at the break of the low here, or the stop loss, or the entry point at the midpoint, as soon as you get a 1-to-1 reward to risk trade, scale out of the position, buy back half the position, and move your stop loss accordingly. Or if you wanted to have a very safe entry and you didn't like the look of potentially getting in the way of an oncoming trade, if price does surge up and the euro strengthens against the British pound next week, what you could do is go down to the daily and anticipate a lower high on the daily time frame. So if we get a succession of, say, buyer bars and a bearish pin bar reversal on the daily, then that could be a nice little entry to take advantage of a lower high, taking into consideration that that could be the acceleration point of a double top formation, a bit like what happened with the US dollar versus the Canadian dollar. For example, a number of people took this lower high here when it set up a few days ago. I think it was Tuesday or Monday, this lower high bearish pin bar reversal that gave traders a more aggressive entry into this trade, really. Okay, so that is one for you to bear in mind. It really does depend on what personality you have as a trader. If you're more happy with safety and are keen to accept a lower profit for that safety, then it makes sense to go into conventional standard entry. However, if you do want to take a higher risk and are happy with a heightened chance of getting it wrong and losing, However, if you do get it right, then you'll certainly be rewarded for it, far more so than if you took the kind of safer option. Okay, so that is Euro GBP on the weekly time frame.